Hi guys, sorry we had a little bit of an issue on the audio side, but okay. So I'm going to do a quick introduction of Weber all over again. Some of you will have to bear us with that, but well, we've got Weber Ulolha, who's one of the co-founders of ftcash. ftcash is a merchant lending and a payment solutions company. Weber is an NIT Trichy graduate and a Harvard Kennedy School fellow. Yeah. Weber's worked across areas, across social, across areas, startups. In fact, there's a very interesting startup that you had just before you started off ftcash, and we'd like to talk about that as well, right? Let me give you a quick synopsis of what ftcash is all about. ftcash is, and like I was saying a little while before we kind of went away from the audio check, is what stuck with me was it's called faster than cash. That's what FT stands for. ftcash is fundamentally a merchant, so lending is in the merchant's lending space. They have raised so far about $10.5 million, Series A, and that's one of the biggest mountains to climb in the funding series. So that's something that Weber and his team have done very well. Weber has and ftcash has, in the fintech space, which is very, very popular, hot right now as a sector. They're addressing a very, very unique problem, and that is about digital and financial inclusion for small and medium-sized merchants. Your Dhobis, your milkmen, and that's where it is at, right? Thank you, Weber. Thank you once again. Right, I'm and I'm going to go, because we've lost a little bit of time, but I'm going to go straight into a little bit of background that I would have probably talked about. Tell us a little bit about yourself before you started ftcash. Who's Weber all about?
Sure. So I started my journey right after college. Graduated in 2007 from engineering, and like most engineering graduates, I didn't have any clue what I wanted to do in life. So I started with a more generic approach, which is consulting. So I was into management consulting for a few years. I was doing healthcare and pharma consulting, and it was based in India and US both. So consulting for me was very interesting because I learned a lot in terms of just understanding the basics of business and like even business communication. All of the professionalism came from just consulting itself. We work with extremely smart people. But after 2 or 3 years of working, like at least I felt that my learning sort of saturated a bit, and that's when I decided to move into a little more high growth or faster environment. And I chose to work on a fellowship by a Swiss bank, LGT, wherein they had invested in a Stanford-based startup coming to India, and I was leading their business development and growth here. And so it started off as a journey very different from what I was doing before. It was in drip irrigation agriculture space. I did that for the next 2 years, scaled the company. We won several prizes, and there was a lot of recognition for it. And eventually the company got acquired by another company in India. So post that is when I started to work at the World Bank. Because again, I was coming from the water experience now. So happened to work with the World Bank in the water and sanitation space, and they deputed me to work at the Ministry of Water Supply and Sanitation for a bit as well. So it was like a mix of experiences that time. Learned a lot about like policy making, governance examples, and that led me to a program at the Harvard Kennedy School, which was in the policy and leadership space. Once I did that, I came to Bombay, and I started to work at this company called Lodha Group, which is fairly popular in Bombay. I was working with the directors there, and actually that experience for me was very critical because I never worked at business at scale, and it was one of the very fast-growing environment. I was working with the directors, so it gave me a lot of visibility into how they think in general, how their business decisioning happens. And post that, I did a couple of interesting projects, like working on the election campaign. Also did a private jet deal for a bit. So very interesting experiences. But then later on, I moved to an enterprise which is a US nonprofit, which works in the water space again. And interestingly, they were basically an organization that is bringing an exponential technology to the present. And the way they did that is by incentivizing people with a large prize money.
Okay.
So in this case, we create that atmosphere itself. So that project, post that is when I got started with ftcash in June of 2015.
Okay.
Yeah.
All right. So I want to go back a little to
Yes.
the water
Yes.
generator project, because that sounds very interesting. Like we were talking earlier, the next set of wars are probably going to be fought
Yeah.
over water and not
Yeah.
really anything else. So tell us what is it that you built? I think.
So basically, it is so the Express as a company was something that started the space industry actually, this privatized space industry. So in 1995, Peter Diamandis was sitting out of his garage, and he said that the entire space industry is governed by the government and NASA right now, and I want to privatize it. So what he did was he announced a $10 million prize without having any money in his pocket, and said that okay, whoever creates a spacecraft that will take that will go to suborbital space 100 kilometers, come back, and in the next 6 months go again with a private person like a space tourist. I'll give them $10 million. So for 9 years, no one was able to solve that problem, and in the 10th year, there was a company from Israel that was able to solve it. And one of the sponsors of the prize, Mrs. Ansari from the US, she became the first female space tourist at the time when the prize got completed. And she went in the second trip of the aircraft. When the aircraft landed in Mojave Desert, it was bought over by Richard Branson as Virgin Galactic. It is known today. So that's how like they have created industries. They have created entire segments that never existed before. And this was the same effort in which we wanted to launch a prize that would help companies do that. So we've had like a winner now, and there is a company that is doing that from the US itself. And there are multiple other companies that have also come up in this space now, realizing that because the sources of water are limited, this is actually a great platform to be able to do this at scale.
Oh, that's nice. That's nice. All right. Let's come back to
Yes.
ftcash, because that's really what we're here for. And your journey over the past four and a half years. So ftcash was incubated by PayPal and
That's
Mastercard. That's what I'm going to understand.
And now Facebook.
And now Facebook. Interesting. All right. Tell us how did the idea come about to you? So I was reading a little bit about how the thought came to you, and yeah, I'd like to hear.
Sure. So the three co-founders in the company, all three of us have had different personal experiences, but they all come in at similar time periods. So what happened was, personally for me, I felt that on every start of the month on a Sunday morning, my newspaper vendor, milkman, everyone could come to my house and ask me for money. And it's a very small sum. Typically, I would feel that even if I don't give it for a day or two or a week, it doesn't matter. And he give this frown face to me as if like I've really committed a crime. And one day I actually happened to ask him that what's really wrong. Like I'll pay it next week. I don't have the cash today. And his point was that, sir, like this is a small sum of money for you, but for me it's a fairly large amount of money. And what happens is that there are 200 neighborhoods in the area that don't pay me like this. Eventually it becomes a sum large enough that I have to lend this money from a money lender who's going to charge me exorbitant interest rates, and then I have to give those interest rates, and like then I'll be able to repay and get continue my supply. So I didn't really realize that like a small step like mine would create such a big ripple for this merchant.
Sure.
And that's when we started to research into the subject. We came to know that there are 60 plus million micro merchants in India, and only less than 2% had access to capital or digital payments.
Okay.
And for me at the time, I was like, if this person was able to bring in a digital payment option to me, or maybe send a link to me every day, every month, I'd be able to make that payment instantly without him realizing any issues. And at the same time, like there's so much of data about this guy, like he comes to so many of these neighborhoods for so many years. Why can't he just simply get a loan from a bank? But that's when like further research realized that banks don't typically lend to this segment. And the three reasons for that. So one is that banks don't have enough data points for these merchants, they didn't have enough the same risk models.
Sure.
And at the same time, like when they've tried the typical standardized lending models for these merchants, they've failed miserably. So that's when like we realized that probably we should be able to do this with the help of tech and like
Interesting.
yeah.
Interesting.
Data.
So how you said 16 million micro merchants or merchants, and that's huge, right?
Yeah.
Because that would probably mean a very large percentage.
It's a $300 billion industry.
Wow.
Yeah.
Right.
Huge.
Right. So and you're saying that most of it is underbanked.
Yes, absolutely. Yeah.
Right. And so given that kind of challenge, so when you started, at what point in time you thought that, yes, we should go after this problem and try to solve this problem?
So this was when Sanjeev, Deepak, and I had just met, and then when we discussed this, I think that is when we realized that there's no other way to know this until we actually try this out and then try to solve it as well.
Sure.
And that's when we said, okay, let's launch a very basic, simple product in the market and see how it goes. So initially, the product was actually launched only in Hawaii.
Okay.
We were doing only the first few hundred merchants in Hawaii to see how it goes. So even to get the first 50 merchants was a big problem for us, because merchants are not that easy to be convinced, especially when it comes to money. And when they know that, okay, if I made one transaction today, I want to see that money in my bank first thing tomorrow morning. When you make a digital transaction, that was hard for us to be able to convince them. So in some of the cases, we had to sit with those merchants through the day to make sure that the money comes to them in the next day morning itself. So there were a lot of personal guarantees that we gave them, those merchants. Once like they saw the convenience, especially a specific set of merchants, then we were able to scale that business once in Hawaii and then rest within Bombay itself.
Right.
And that helped us scale a lot better.
Oh, okay. All right. So when you started off, tell us a little bit about your first few customers. How did they behave? How did you get your first customer, if that's?
Sure. So actually, see, the first few customers were people within the neighborhood that we knew, and we had to get them. So we were able to convince them, make transactions. So first few transactions were within friends, families, people that we knew. They made because they had to get convinced. We also gave small incentives for them so that they get convinced that, okay, like customer gets an incentive and then the merchant also gets an incentive to be able to do that. Once there were a few transactions and they saw there was an ease, there was like the actual money being transferred, then it was easier to get more of them around it. But the first few of them we had to get incentivized so that they are able to at least get to trust us.
So so when you went to the market, had you already raised capital or where
the first set of product that we created, the basic one, we hadn't raised money. That's own capital itself. But we raised very quickly seed money from IVCap Ventures.
Oh.
So that was like a very small sum. It came around $150,000, a crore of rupees at the time. So that was the sum that we raised, and then we consistently raised like smaller ticket rounds for the next 2.5 years before we just recently closed the Series A.
Oh, okay. Yeah. Right. So your challenges when you started going up? Did you go after investors early on? Did you go after family friends to start it? And how did you get your first seed?
So initially, in the seed round, like we approached a bunch of HNIs that we knew, and like IVCap Ventures was also in the same area, so we were able to approach them. So that is the way we did. Obviously, having a personal connection, personal rapport does help. So one of the things that we've realized is that either if you come through a reference or personally know people working there, it makes a huge difference. Because everyone looks for trust, and I think if you're able to establish that trust, it helps a lot. So typically, while cold calling is obviously the way in most of the places works, but I've also felt that references actually work a lot better. So that's something that I've definitely seen in the initial rounds of some that you're raising, because people are not betting on the idea as much as the entrepreneur himself.
Sure.
So they want to see whether the person that they are putting their money in, do they trust them or not? Whether you believe that they will be able to scale their idea or not. Because, and we'll come to that part of the journey later, but like there are pivots that you have to make in your business, and we've consistently made them as well, wherever required. And that requires you to be open about it rather than just fixated on the idea.
Right. This is something that we've heard over the last 3 conversations.
Yeah.
As well. Do not be fixated with the idea. Listen to your market.
That's true.
Listen to your customer
and
make changes accordingly.
Absolutely.
Right. So let me come to, because fintech is regulated.
Yes.
Tell us a little bit about regulatory challenges. When you started off, I'm sure the government policies have been evolving over the past few years.
Yes.
So what were your challenges, and what are the key things that one as an entrepreneur should watch out for?
So when we started in this space, there was no clear. We were trying to become an aggregator, payment aggregator for merchants. So we would eventually take the underlying risk across all these merchants and be the super merchant with the bank. The banks typically had an issue understanding this model because they're like, but what if you wrap up, or what is an issue and all that. So that took us a while. So it was not as much of a regulatory issue as much as a bank understanding that this is what we want to do and it is okay to do that, because they themselves don't have clarity.
Sure.
And that, like, the hierarchy within the banks, it's hard to maneuver, like, to get there. But once you get there, like, then you're like good for a while. But obviously over a period of time, as digitization became easier, faster, there were a lot more people who were able to work with us.
So it's a way to give you an idea. ftcash aggregates digital payments, and they do not lend themselves from what I've.
So we lend money, but we don't lend money from our own books. So we're not an NBFC or a financial institution ourselves, but we do the acquisition of a business or a merchant. We do the risk assessment of the merchant, and eventually we do the ongoing risk management or the collections as well whenever required.
Okay.
So all the three parts of the business we do, except for the disbursement. Yes. So that risk assessment eventually is done at our end, but like an NBFC also does it at their end. So we have partners that we work with.
Okay. So when you started ftcash, I'm sure one of the largest challenges in lending is how you build models, risk models, which ensure that you have as little dropouts.
Yeah.
No dropouts as possible. So how did you start gathering data? What kind of signals were you gathering?
So when we started in our payment journey, we started to realize that, like, payments, we scaled a lot. And we got to more than 35,000 merchants, like the business was booming. This is when, right after demonetization as well, when the scale was even bigger. And it's just that we realized that now that we've got this immense amount of data, right, we also started to hear noises from the merchants that the true need is actually loans than just digital payments. Digital payments were nice for them to have, but loans were their true need. And that's when we started to reach out to these merchants. We understood the requirements that they had, what kind of loans they need, what kind of tenure, how easily they wanted a loan, and what ticket sizes. And that's when we created the first few set of products. I created the product for the next 1 year, okay, to understand what product works in the market. And post that is when we launched it with partners, and that's something that we're working on now as well. When our product is more or less finalized, it's a proper product with obviously evolution that happens in any regular business. But that is the product that we're working with now. Now the data points that we've collected from payments, for example, the kinds of merchants, their transactions, their locations, like their call logs, that they were very helpful in us figuring out what kind of merchants they actually are more credible than others.
Oh.
Yeah.
So how large from a book size or from the number of merchants that you have? How large is that?
So today we are serving almost like more than 35,000 merchants that we're working with. Apart from that, we process almost over 30 crores on a month-on-month basis. So that's like significant amount of volume for this segment of business as well. And we've almost grown 20-30% month over month.
Wow.
So
month over month and not year over.
Yeah, it's month over month. So that's why, like, our targets are significantly higher, like each time, like we've achieved something.
Okay. All right. So in the initial pivot, so to my mind, you did that pivot from
payments
to lending, right? What were your challenges from a team perspective, structure perspective, or how large were you? From an organization perspective, the times when, as a leader, if you have to change the mindset of your internal team even before you get to the market, were there any challenges or is that something that?
For the first month and a half when we made that pivot, I think it took us time to internally confirm to ourselves that this is what we're going to do. And when we like sound this out to our team as well, I think we were not doing like a convincing job to do that. But one fine day we realized that we're giving mixed messages, like for the first 15, 20 days or a month maybe. But then we realized that now we have to make a solid call to tell everyone that forget like what we've done so far. We are a lending company, we are a lending first company, and then we will recollect the money using payment platform. But that, so even when told it the first time, there was a sort of disbelief, I would say, among people as well. They thought payments is still an option, we should be able to do it because there's comfort zone there. Because we've been doing it for the last 2 years, they thought like we should continue it and scale it as well. But we realized that where the business should head to as well. Thankfully, we never had to cut any jobs for people or like let go of some people. Nothing of that sort happened. But we were able to maneuver those same people, retrain them into at least into working with us on loans. And that part has been actually quite significant for us because we understood at least the nuances that are involved in lending a lot faster. And for people also, it was interesting because it's not that, oh, if they're stuck with one thing, they're doing that forever. Like as companies evolving, they're also evolving into different things.
So, well, one specific thing that I'd like to delve a little more on is fundraising. You guys have had a journey of
Correct.
seed to Series
Yes.
A, and most people do not. Most startups don't end up reaching Series A ever. So, tell us a little bit more of that journey. What to watch out for, and some moves there.
Sure. I think what we've seen in pitches, and I've seen a lot of pitches that people make. One of the core issues is that they're very fascinated by their ideas, and they want to show how beautiful their product is. But a lot of people miss out on explaining what the real problem is in a very personal level. I think creating that storyline from a problem perspective, that you know what, I saw this problem, or I'm seeing this problem, or there is this problem, and what are the issues with that problem, and how you're solving that problem at a broad level, not at the product level, not with the app, not with the solution, but at a broad level, what problem you're solving. Then going to the level of like, okay, so how is this better than anything else? That approach makes a lot more difference. So when I told you about like the story initially that I had, right? What typically happens is people end up remembering that story. So because there is a very personal element to it. But at the same time, if I only start with numbers, right, that there's 60 million merchants, 300 billion industry, we created this product, how beautiful it is. Suddenly you'll be like, okay, fine, like maybe this is one of the products, maybe financial services is already working on it. But at a personal level, when you think, when there is a persona to the person, that stickiness remains in each story. And I think a lot of people don't realize how important that creating that persona of the problem is. So that being said, I think a lot of people we have seen also make mistakes. And we also initially in the seed round, we were making that mistake that once we raised that round, we said, okay, let's close the bigger round first and then we'll do our growth. Doesn't work that way. Your numbers have to consistently keep growing while you're fundraising as well. So fundraising is a side job, but like growth is a main job. And a lot of people like eventually put growth on the back seat and say like, let's do the fundraise and we'll figure out. Doesn't work. Because if your numbers are not impressive, no one's going to talk to you. And that I think is one of the very important lessons that we've learned as well. Apart from that, one very interesting that we've seen during our pitching sessions is also that having some amount of visibility recognition also gives people the attention because they're seeking validation. So for them, like the moment you have an accelerator or an incubator who supported you or an award that you won, suddenly they'll start to qualify, okay, that I know like this company is solid or at least here, or I should give them the benefit of the doubt that somebody else also has validated them, because no one wants to be the first person to validate themselves. So it just, that very little bits and pieces, those things sort of help. I think in the initial rounds, especially maybe till Series A as well, most people are betting on the promoters and the entrepreneur rather than the idea itself. They believe that the idea or the person should be someone that eventually, even if the idea doesn't work out, they will be able to tweak themselves in a way that they will be able to take the business forward. And I think that is again one of the things that we've seen, because Series C, Series D onwards, no one cares about the people running it primarily. It comes to the business, like the fundamentals of the business itself. But till Series A, it's still about people itself.
So now that you spoke about people, I'm going to go back to the three of you, the co-founders. How did so it's very important. You see a lot of startups falling apart because the founders don't see eye to eye and challenges that happen across the world. Tell us, how did you guys come together? On what level did you connect? Did you guys know each other early on? And what made you three come together? How did you say, okay, it's the three of us and not necessarily five of you or just one of you?
So I think typically for any company, I think 2 to 3 is the right number. Apart from how we met, Sanjeev and I met like at a networking conference and an Ivy League event. And apart from that, Deepak and Sanjeev were already known to each other.
All right.
So that's how the three of us got along and then we met. A part of the reason why we were also able to work very well in the last 4 years that we worked is all three of us have very complementary skill set. So there's a professor at the business school at Harvard. His name is Clay Christensen. His one of the statements is it stays with me very well. He said there are 3 kinds of people you can start companies with. One is your best friends. One is people who are acquaintances, and the other people are people who are completely unknown to you, almost like nobodies. And the challenge is that if you start companies with your best friends, it's almost going to fail, because you also have friends who almost think like you all the time.
Sure.
So then it becomes very hard for you to have communications, and that makes it very difficult for you to progress the business, because when it comes to keeping the business interest first or friendship, you end up choosing friendship. In cases where like people are completely unknown to each other, they don't know, so they probably go have first instances of first impressions, and they end up choosing people again like themselves. Wherein like you like, oh I think I can work with this guy. But when you have acquaintances, when you sort of have some sort of an understanding of their behavior, their working style and all that, and then you like, you know what, I think there is a complementary skill set. This guy can do this particular part well. I have no idea about this, but I can do this well. Right. And that's when the complementarity comes together and it works a lot better.
Great. How to pick co-founders. I think we should rewatch this clip for all the new budding entrepreneurs out there. So that's one part of you starting off with people who are acquaintances. The initial teams are also very, very key and important. Right? You have to inspire them, and you have to inspire confidence in them about the concept, to the founders themselves, and 3 that you're going to be around. There's a problem to solve. So tell us your initial days. Was hiring? How was the hiring piece in the initial field?
Our first office was actually in a shop in a mall in Powai. In the Hirapanna mall, and the challenge we were facing was that their shop would have like less than 4 people that can sit inside. So we were like the 3 of us would always sit in the gallery outside, and the early employees would sit there. So a lot of people who come in like for interviews, they would like very hard to convince, because we would end up either having an interview there where they're not impressed at all, and then or else we'll meet at the local coffee shop. Again, they'll not get the conference because they're like, I don't know why they don't meet at the office itself. But the people who came in and stuck with us, I think what we've also done is made sure that they're promoted or they've scaled in their own personal growth a lot more than somebody else who's come much later. So having said that, I think the first set of people who had come in, some of them have continued to stick with us. And that's because of the learning and the growth that they've seen over a period of time as well. What was the other question that you had?
So the other question is, what kind of skills, what not skills, what kind of attitude, what is it that you look for when you're hiring?
In the early stage of the now, like
I think you could tell us both.
So early
how
stage
different that,
hiring is, I think, very different. It's a lot more about what you can afford in people as well, because salary is still a constraint. The amount of money you can give. So I think you don't typically hire too many senior management or like folks, because I think a lot of that work has to be driven by you. So you do have people at every level at the time, like juniors, seniors, juniors and mid management anywhere at the time. But you have people who, I think at least we had people for attitude. That if they had this learning attitude or not, whether what reason were they coming in for.
Sure.
I think as long as that worked for us, it worked. I think a lot of that theory still works with us today as well. We don't necessarily have people, like I don't come from a financial services background, so I can understand there is somebody else who's from an outside background, but still has a can-do attitude to do this. I think we had them as well.
Okay.
And we have done this. Even now, we have had people who've doing extremely well in the company with the same place. But as we grow, I think there is obviously a place for senior management as well. People who have experience in this segment, who probably can manage better than us or like handle something better than us, and where the specialization is required. That I think we look at now a lot more than we had looked at in the early days. That way, like now we have a better office, so then like when they come, there is a place that they feel like okay, yeah, they can work out as well. So small things like that sort of make a difference. But overall, they still want to see the way their tuning and working with us can happen. Yeah, that's still I think that's still something that that goes on. I think that's a very important play most people have, and that's why for senior management, for example, we still have all three of us typically meet people. For sales and like feet and street kind of folks, what we've done is like typically the senior managers who are there who are managing those teams, we give them the liberty to manage those teams as well, because otherwise we'll be micromanaging and we may not be the best use of our time as well.
So how large is ftcash in terms of people?
Today we have about 280 plus people. So yeah, it keeps changing every day.
Sure.
But yeah.
Sure. The 280 is a very large number. Nice. So where does ftcash go from here? You know, you've done, I think, the first 4 years have been really building blocks up.
So now I think it took us almost 3 years to figure out the business model. Last 1 year we've been basically scaling the business model. And I think the next 4 years will be only going in that. So I don't envision ourselves adding too many different things as much as just like focusing on this one thing and scaling that. Primarily because once you've figured the business model right, once you scale it to that extent that okay, you're unbeatable, then other things can keep coming along with that, like insurance or wealth management and all that.
Sure.
But I think if you do this particular core part very well, we will be able to manage and become profitable very quickly. Because for us, this part of being able to scale this product, especially in lending, and making sure that we manage the risk well, is far more important than like trying different other models and other businesses and confusing ourselves. Rather than just focus on this piece and then we have make sure that we're doing this well. Yeah.
You're one of the few entrepreneurs that I know of, startups who speak about profitability.
Yes.
I think that's very interesting because.
But financial services is part of the reason why I came in this sector from all the other experiences, right? Is because I feel financial services people are willing to pay money for it. Like no one asks for a loan on a discount and stuff like that, right? No one is saying give me cash back and stuff.
Sure.
So it's like one business wherein you know that you will make money, people are willing to pay money, they've been habitual of paying money as well. Banks have done a good job at that.
Right.
Only thing is you have to make the experience good enough that they come to you.
Sure, and you're solving a large problem in the market.
Correct.
The micro merchants.
Yeah.
So, okay, so I think we've got about 10 minutes to go. So I'm going to throw this open.
Sure.
A few questions as well. Is there anything that you would also like to advise someone who's starting off, someone who's initial few days, anything in specific? I know you've told us a lot of.
I think one thing I learned in my first entrepreneurial stint was actually product market fit.
Okay.
So we were doing drip irrigation. The company was doing or had a great product. Got it to India, but the challenge was that the fit in Indian market was not that good, and we would constantly struggle with that. So we would basically try to retrofit a product which is made into the Indian context or any context for that matter, and say that this should work. Same way I've seen a lot of people feel that they made the product and like they're trying to just make that work without realizing that okay, they're constantly getting some subdued feedback which they should incorporate or at least maybe completely pivot. It depends on the situation, and then actually solve that problem. So rarely have I seen that you come up with the first version of the product and it's the best or the completely working product that works. And this point I think is not emphasized enough.
No.
Like a lot of times I've seen that people just go with whatever it is and like try to say that okay, I think this works, which is probably not the right.
Not the right way. So I think I've had a very interesting chat with you today. Let's take some questions and see where we are at. All right, we'll try and yeah. So some of the questions that have come about, and I'm going to try and look at it is, how did you meet your co-founders? That's part of the question that you've answered. But any challenges, anything that one should keep in mind. You've already told us that you look at complementary skill sets and not necessarily similar team background.
Yeah.
Anything else that you think should be kept in mind, or or just have an open mind really to.
I've usually felt, and I may be wrong when I say this, but I think a little bit of experience in professional setup does help when you're starting off. Okay. Just because you understand a little more about business than just completely coming off like new on the block. Like if you're just graduating and you're starting off, right? You have a lot of energy, but like you probably have not understood processes and structures and organizations. So that's why, at least to my understanding, especially in the Indian context, I've seen a lot of brilliant companies that have come out have been like they've created great products initially, but eventually they failed to scale because they failed to scale the initial product to the right places, and probably failed to create some of the processes that are required, which some of the larger companies have. I think for me that has been a big case.
Sure. All right. One question that's come about is, so and you spoke about it, that you pivoted from a digital payment solution to a lending setup, and I think if you could tell us, was that around demonetization? So did that impact you?
So demonetization definitely had an impact on us. One, initially in a great way, because digitization was pushed to a next scale altogether. Suddenly, like we were growing so much that we probably didn't have the capacity to fulfill that need, and that really helped us scale as well. But on the same, having said that, like I think post that there were a lot of issues that happened as well, wherein from the government side, like a lot of MDRs were reduced. There were a lot of digital transactions for some time was made free of cost. So there suddenly you realize that now people feel that digital transactions should be free of cost. There should be no MDRs, there should be no money to be paid for it. That is why we felt that if that is the general direction where the country is headed towards, maybe it's good time to actually make a move to a true need of the merchant where people are willing to pay the money as well. Because free services can only go that far, but eventually if there is a true need and then people are willing to pay for it, might as well address that.
Right. I've got a question. Someone's already saying a very informative session. When you intend to, so how do you intend to scale to a tier 2 or a tier 3 city? Because and that's really where a lot of companies find it.
We are already working in tier 2 cities. So the idea is that we continue to work in tier 2 cities itself. Because at least to our knowledge, tier 1 cities anyway will have a little more oversupply than like lack of supply.
Sure.
So obviously we feel that the growth will always exist in tier 2 cities. Now how will we grow? I think we have 3 models of growth in our own business. We have a sales team, direct sales team that works for us. We'll continue to work with them. There are channel partners who are able to get in loan applications as well that work. And the third one is typically partnerships. So we've had partnerships with the likes of a Procter & Gamble, Bayer. We've done other partnerships as well that have helped us scale in our business as well.
Okay. So they have ftcash has a 3-pronged approach to distribution and growth in smaller cities. Let me try and read out a few questions and see something that. Okay. So they're asking. There's a fundamental question. The question is, how does the model make
money?
So who gets charged as the merchant?
So it's a very simple approach. For payments, you charge an MDR, you make money there. It's just that there's not enough money in the segment much anymore. So there the data is a lot more important play than just the money. In payments, you hardly make like 5-10 basis points if you're lucky. That's broadly boiled. So it's not as much money. At the same time in lending, the business model is that we work with partner organizations we have revenue and revenue loss shares, and that is split based on the amount of quantum of work that we put in and the capital and the risk as well. So that is a risk sharing model. So each loan, say if it's an 18% interest rate that we've given to the merchant, we share a risk and revenue there.
Okay.
Yeah.
So you do share risk.
Yeah, we share risk as well, because I think to our partners also need to feel that we have skin in the game.
Right.
So
Sure. How has tech changed drastically? How has the scenario changed in the era of tech? Well, to be honest, when I'm reading this question, what comes to my mind is, businesses have gone digital, and what are the challenges in keeping your business while it's a tech-led business? What are some of the challenges there? Are there something that you have constantly work on?
I would say it's a reverse challenge actually.
Okay.
That because of like the constant digitization, mobile, and the availability of data that people speak about, suddenly there is this thought that everything should be digitized and there should be nothing physical.
Sure.
I have a contrarian approach to that. That there will be a physical part to a lot of businesses that we run, because there is an element of comfort there as well.
Sure.
When I go to a merchant and talk to him physically and telling him about the benefits of the loan,
Right.
their understanding and the comfort is a lot more, rather than just trying to do it through a WhatsApp message or like through some sort of a website or Facebook post.
Sure.
So I think there is that physicality angle to it. So there is a romanticism around digital business. I feel that there is a phygital which will be a lot better space to be in, where there is a combination of physical and digital. At least in lending, it can't go digital overnight.
Sure.
And while there might be smaller tickets loan that you can do that completely digital, but like the kind of loans that we work in, wherein like typical loan is over 1 lakh, it's hard to go completely digital. And I don't think we'll see that in the next 3 years also.
No?
Yeah.
So I'm going to take this as one last question actually, because any takeaways, personal takeaways. So we've got a few more questions, and I'm going to ask them to be emailed to us, but,
Sure.
so that we could answer some of them. Having said that, if you have to sum up your last 4 years of journey, and probably even the earlier pieces, and 2 or 3 takeaways, maybe one.
So for me, one experience or takeaway has been that I always believe in the idea of experiential learning, and that's why I have like a breadth of experiences. I've tried everything at my hand, at everything that's available, and that's just because I feel like there is when you have that level of experience, or like just you enjoy it at the time, and I feel that you should do it, that part of it, as and enjoy it while it happens, because if you only think that it'll become better in the future, right? It doesn't happen.
Sure.
So for us, like in the time when we were working on the shop and we had just 5 people, 6 people, that time also is very enjoyable. Wherein today there is a lot more comfort that we have in terms of people. I think that is also a comfort or the enjoyable zone. So I think there is one piece that as long as you're enjoying it, things will be okay. I think the second is more technical, which is a lot of businesses, like there's little noise about like discounts and like all of this.
Sure.
I feel a funding event, like when this whole idea of people getting fascinated by funding, I'd say as long as like there is a business that will eventually make money, right? Funding will come.
Sure.
And I think people, because of media attention, there is this constant thing that, oh, this company has raised this much money and this company has raised this much money. They often don't tell you which companies have shut down, because like after they raised the money, they couldn't find a business model.
Right.
And that happens so often these days. There are hundreds of companies since the time when we were doing payments. There were hundreds of companies that were coming on a monthly basis just doing payments. But because there was no business model and they stuck to the same model itself, they shut down eventually. And that doesn't come down in media, right?
Absolutely, absolutely. So I think to my mind, guys, the key 2 takeaways are passion. When Vaibhav said it very differently, I'm going to sum it up as passion. Be there, be after the problem, keep solving problems, keep identifying and solving problems. And the second piece is, and problems passionately. I think these are the 2 things really, Vaibhav.
Yeah.
Great. Thank you very much, Vaibhav.
Thanks,
It's been a pleasure.
Nice talking to you as well. Thank you so much.
Talking to you. Thank you. And thank you, everyone. And we will keep watching this space for the next series as well. Great. Thank you very much.